visiting Bangladesh. And so for some quick context, over the last decade, Bangladeshi startups have raised over 800 million in investments, correct me if I'm wrong, spearheading the economy and creating 1.5 million in direct and indirect employment opportunities in the first half of 2022. Bangladeshi startups raised over 90 million. All right, so these numbers are going to be put into a bit more perspective as we go through this call. So first off, I just want to say, though, about those numbers, they paint a clear picture of upward economic growth and an increase in startup and investment activity, but that isn't the whole story. So we're going to dive deep into some of the boots on the ground efforts being led by Nirjhor Rahman and his team at Bangladesh Angels, who will be speaking today about the ecosystem as a whole and some recent initiatives that him and his team are leading alongside the USAID, DAI, and other folks who have their hands in this work of early stage investment capacity building. So Nirjhor is the CEO of Bangladesh Angels, the country's first angel investment network to connect innovative companies with smart capital via individual and institutional investors. Previously, he was the country director at YGAP, which is a social business accelerator. He ran a program called SWEEP, which helped scale social enterprises in urban sanitation. So without further ado, let me introduce you to Nirjhor. Thanks for joining us.
Yeah, no worries, and good to see everyone. Happy Thanksgiving to you as well. It's my favorite holiday, but I'm spending it in Bangladesh, so not as much celebration, I guess. But yeah, Paulie, if you can allow me to share my screen, maybe I'll go into my deck.
Yep.
Perfect. Thank you.
There you go.
Thank you so much. So the first part of the presentation. So a few partners in the ecosystem, including us as Bangladesh Angels, but also a few other firms, including VCs, including consulting firms, do these sort of annual and quarterly refreshers on the ecosystem. So you could see the logos there, and it's a very good kind of good source of data on the ecosystem. So I'll go through what we've analyzed and uncovered over the last quarter, and then I'll also give an update on what Bangladesh Angels has been doing over the course of this year as well, and some of the learnings from that as we try to scale ourselves as a sort of a small to mid-sized angel network. Yeah, I won't read everything, but I think it's quite clear that there's a lot of macro headwinds that are also coming into Bangladesh. The particular context behind, all the crises that everybody else in the world is facing, Bangladesh is, depends on a few things. So one is it is heavily dependent on the ready-made garment industry, which depends in turn on the US and European markets, and particular from the European markets. So obviously a recession or a looming recession there has a lot of knock-on effects into our manufacturing and exporting sector, right? So that it's almost 80% of the export basket is actually the garment sector. That's one. Second is we're a net importer of a lot of things, and in particular oil, energy, and food. So obviously what's happening in the Ukraine, and both from an energy standpoint, but also from a food standpoint, because I think we're a large importer of food from the Ukraine and CIS. I think that's also had a huge effect on our dollar outflows, which means our currency over the course of this year has depreciated by 30%. That's been another kind of big challenge from a macro level. And there's a few specific challenges to the economy as well. So, next year's elections are always very contentious and very and sometimes very violent in a young country like Bangladesh. And so, there's a lot of companies, a lot of individuals are also kind of curtailing their own investments, going into next year. So there's all these kind of headwinds that are then kind of affecting the overall economy. We had asked for a preliminary, a preemptive IMF loan, which just recently got approved. So we're not necessarily in the same kind of position as, say, some of our peers like Sri Lanka and Pakistan, at least once again from a macroeconomic standpoint. But definitely, I wouldn't really sugarcoat the challenges we face as a young economy, despite the fact that there's obviously the fundamentals have been very strong. We've had 40 years plus with straight line growth. Only two countries in the world has done that: Vietnam and us. Right? We've got a young demography. We've got a very young country. I think the average age is less than 30. I think 28 years old. All these long-term things are great, but obviously in the short term, there's obviously a lot of headwinds. What does that kind of then? How does that translate to the startup sector itself? So last year was the most successful year ever, at least in terms of investments raised into the startup ecosystem in Bangladesh. So as Paulie mentioned, over the last decade, $800 million has been invested into startups based in Bangladesh. Half of that came in 2021, and in particular, I think around, and specifically in 2 or 3 companies focused on the fintech and logistics sector. This year, the total has been about $95 million, so 25% of that. And in Q3, it's been $5 million, which is just a very small fraction of that. So obviously, you see the investments going down in relation to the overall kind of ecosystem, for sure. I think this is kind of a phenomenon across the world, right? So you look at the global figures, obviously it's been going down steadily since Q4 when it comes to total fundraising. When it comes to, our peer economies, I think Pakistan's a great sort of comparable for us as an overall ecosystem, because we have a lot of very similar cultural characteristics, demographic characteristics, even the makeup of the economy, and how specific sectors that it relies on. I think it's a very good sort of comparable for Bangladesh as a whole, and in particular our startup sector. It's been going down in Pakistan, but they're still almost 10x. They have managed to raise 10x more capital than we have, and in particular because Bangladesh has this very interesting kind of geographic positioning. Particularly from the standpoint of international investors, whether they're investing in startups or whether they're investing in capital markets or private equity, is that we are the farthest South Asian country, right? But we're also the farthest Western Southeast Asian country. So let's say you have a Southeast Asia kind of thesis as a regional investor. Bangladesh is sort of on the side, although technically it is Southeast Asia. Let's say you've got a South Asia focus. Obviously, you've got India, you got Pakistan, but then Bangladesh is on the other side. And then Pakistan, I think, benefits quite a bit from the fact that it's also kind of an extension of MENA. Which we don't have that luxury, right? So we're kind of in the shadows of India in many respects. Although when it comes to raising capital from India, at least what I've seen in conversations with Indian investors, is that India itself is such a dynamic ecosystem and economy, to then carve out time and resources and allocation of your funds to then invest in Bangladesh doesn't quite make sense, at least not yet. But those are some of the, I guess, the dynamics of how both entrepreneurs as well as say angel networks like us trying to raise capital for an economy like Bangladesh. As mentioned, we've been going down. It's the third quarter was definitely, I wouldn't say a disaster, but certainly a huge kind of letdown from what was happening both last year then earlier in the year. What's also interesting, I think, is what's also been quite interesting, I think, in the dynamic of the ecosystem is that going back to the $800 million number, almost 95, 96, even 97% of that capital has come from international investors. Right, so there's still a lot of local capital that's very skeptical of the startup sector, that they don't see they're skeptical paths towards exits, path towards profitability, sustainability, etc. And so they're kind of standing on the sidelines, not necessarily investing in the startup sector. So a lot of investments, at least in the last decade, has come from international sources that saw similar business models in other economies that they want to then kind of invest in replicas or versions of that in Bangladesh. But then I think what's been interesting particularly in this year is that I think that's kind of been flipped. So a lot of that investment actually has come from local investment, right? I think particularly as we get towards Q2 and Q3, it's really been driven by local VCs. In particular, there's one entity called Startup Bangladesh, which has been very active. I think they did almost 16 deals this year. They're a government-backed VC fund. They've got a $100 million allocation, and they're very aggressive in terms of trying to get that money out the door into these companies that sort of underpin the ecosystem. But once again, you'll see on the right side in Q1, the average ticket size was 3.3 million. In Q3, the average ticket size was 300,000. So clearly it's local investment, local angels like us, and to an extent local VCs as well. But then that also means ticket sizes are going down, in addition to total investment going down. As mentioned, 38% of total investments really came only 38% of investments in Q3 came from global investors versus 94% earlier in the year. And historically, I think that's been around 97%. And the sectors that are getting the most amount of investment are fintech. We do have a few very strong kind of fintech companies in mobile payments, including in kind of retail digitization as well, and logistics and mobility, as well as consumer, right? Obviously, e-commerce and other sectors are getting the bulk of the attention. want to just call out what some of the ecosystem actors are saying. In particular, I think 2 women founders, which is really great, who are leading the charge in their respective sort of verticals. One is Ms. Sadia Hook, who runs the largest travel tech company, similar to, say, if you've heard of Make My Trip in India, similar, it's called Share Trip, but for Bangladesh, and that's projected to be a $7 billion TAM. Locally. And then the other person is Cynthia Islam, who runs Shajcoach, if you've heard of Nika in India. So it's a cosmetics, omni-channel cosmetics company riding the sort of middle and affluent consumer wave as people spend more discretionary income on cosmetics, personal grooming, wellness. They both have raised money from international VCs, including in the case of Shajcoach, Cynthia's company from Sequoia. So as mentioned, obviously, after the pandemic, a lot of global VCs did visit the country, late 2021, early 2022, and beyond. And those are, leading to term sheets and discussions. But obviously, those rounds are taking longer. In many cases, when we're talking about, Series A plus. So that's one kind of dynamic. And second, for somebody like Cynthia, as mentioned, they're actually looking, even though they raise money from, for example, Sequoia Capital, now they're on track to become profitable, and that's kind of something they're focused on as well, ahead of then thinking about what the next round looks like. And then we're actually participating in their bridge round in order to kind of get to profitability. So it's interesting kind of insights from these founders and how they're kind of adjusting in relation to what's going on overall. And then just to kind of introduce ourselves as as a network. So we started our journey about 4 years ago, exactly 4 years ago. We started as a partnership between an impact investor called Avishkar, which is based in India, but they also invest throughout the global south, including in Bangladesh. A DFI called the Dutch Global Good Fund, as well as a few local ecosystem leaders who saw the need for an angel network to really kind of organize the early stage and angel investing, kind of the early part of that kind of financing value chain when it came to startups, and really organizing angel investing and growing that in Bangladesh as sort of an asset class. One interesting thing about us, we modeled ourselves on a lot of GBAN members. So a lot of GBAN members actually, before we even started, mentored us. Padmaja from IAN is one example. She's been a mentor since the very beginning, since the concept stage. The Lankan Angels team also, I visited them before we launched Bangladesh Angels formally. So we've been mentored by them. So we very much kind of follow their model of, and at least in this part of the world, angel networks kind of make their money in 2 ways. So one is memberships, so selling memberships, right, where members pay an annual subscription to be part of the network, and second, taking a percentage as a sort of success fee on funds raised on behalf of companies. Although increasingly we're also doing a third part, which is also taking carries, particularly in SPVs that we help organize. But an interesting kind of dynamic for us is we've structured ourselves as a nonprofit company in the context of Bangladesh. So what that means is we have shareholders, including myself, my board. We do generate revenues. We pay taxes and everything else, just like any other company. But then within our bylaws, we've structured it so that the money generated by the network is always reinvested back into the network for it to kind of perpetuate itself, serve the ecosystem, et cetera. So no one is actually getting rich. No one's getting dividends. No one's getting capital gains from being a shareholder in Bangladesh Angels. That was kind of something we felt is important to kind of communicate, at least in the beginning, as sort of a neutral body that's organizing angel investing in Bangladesh. But yeah, fast forward 4 years, we have 400 plus members around the world. That's also been interesting. A diaspora is a big component of us. Almost 50% of the network is actually from the diaspora. And we had an 8x growth since the pandemic period. So a lot of that actually happened very much, or sitting online, having webinars like this, reaching out to people on LinkedIn, really growing the network kind of through digital meets. Another part, we've been very busy in the first half of the year. A little bit less maybe in the Q3, but we grew our portfolio by almost 2x between last year and this year. The aggregate amount of money that we've invested into startups in our portfolio has been about $6.5 million, of which 50% came this year. And once again, as mentioned, the majority of it in Q1 and Q2. 30% of those companies have received follow-ons. I think the average increase has been about 240%, and an average time period has been about 12 months plus. Highlights of 2022, we're a very small team. It's myself, it's 3 other kind of leaders, and then the rest are kind of associates and interns. The entire team is less than 10 people. We all work remotely. We're quite lean in how we run ourselves, et cetera. We're very much a small network. How have we been able to, though, grow the memberships, for example, or grow the deals? I think one thing that's really worked is, we have this what's called pod system, where these 3 other leaders run their own pods within the confines of the overall network, and it's almost like running a micro network, because they have their own members that they're responsible for, they have their own deals that they're responsible for, and sometimes they might even be competing with each other to get the mandate from a certain entrepreneur. And I think that's been quite helpful in terms of creating a very entrepreneurial ecosystem, almost like an investment bank would, right? At least in terms of that culture. So I think that's been helpful in terms of the growth. And then obviously I sit atop that, and there's things I have to look at to kind of supervise the individual pods. But what's great is somebody can theoretically come in, and it's happened. They could come in as an intern. They could become an analyst, they could become an associate, then they could become their own pod lead, and take, also, they could get bonuses based on performance as well. So I think we'd really create, I think in the context of Bangladesh, I think that's quite unique in terms of creating that kind of entrepreneurial culture. The second is, really leaning into the diaspora. That's something we really discovered in the context of the pandemic, and we've just continued on since then, right? There's literally 10 million Bangladeshis abroad. Most of them are kind of working in low-wage industries and in countries like in places like the Middle East and Southeast Asia. But then many of them are now in places where they're in big tech, they're in iBanking, and they're now coming into wealth, or at least some elements of disposable income where they can invest. And what we found, for example, engaging with our North American community is, platforms like AngelList really makes it easy for them to cut relatively small checks, do with a few clicks start investing in companies. So for example, we're running AngelList SPVs on pretty much every deal that we run now overall, in order to kind of for example, entice the North American community. We've also seen members of GBAN who are based in these countries like the UK, where there's a big Bangladeshi diaspora, almost 3 generations deep, in the US, where they started in angel investing through GBAN. And now they've created their own companies to then, kind of collate their investments, manage others' funds who are investing with them back into Bangladesh. So that's been a strong pull, and I think we want to do more of that. We want to find more people like that. We're talking to more of these kind of nodes in places like Australia, for example, right? And we're thinking about doing some roadshows early next year to really kind of organize these communities. Another part is, our average ticket size is about 200K, but then one of the things we've been working kind of diligently over the course of this year, and we've been successful in a few cases, these obviously have long gestation periods, is let's try to get co-investment, whether it's local VCs, whether it's regional VCs that are interested in the market. Let's write those deal memos. Let's have high convictions on the deals that we're kind of bringing to them, and also cut the first checks, right? To show our willingness, but then use that as a means to kind of collate and get kind of co-investors. So that's something we've been working on, where we are seeing more and more deals where it's $500,000, $1 million plus. So those are all kind of in pipeline. Some of them it's first tranches, et cetera. But hopefully that will add to that kind of $6.5 million aggregate soon. Another thing is obviously in order to kind of augment our revenue streams, another potential element here, particularly in a country like Bangladesh, where there's a very strong development sector, are working with development partners who value us for the expertise we bring in kind of nurturing early stage companies, whether it's investment readiness, particularly when it comes to investment readiness. So we have several grants and projects, which I'll talk about in the next page, around where development partners are actually almost like as a consultant paying us to run certain programs, particularly focused on investment readiness for early stage technology enabled companies. And we like those, but we're also very careful, because that can kind of extend our limited bandwidth too much. And we want to make sure that the companies, for example, that we're working with through these programs are companies that we'd like to work with them in general through GBAN, right? We believe that our network can help fund them, but then obviously being paid up front for some of that early work, the prep work, helping them with financial modeling, pitch decks, et cetera, coaching. If we can get paid for that, because we don't charge that, right? We only get a success fee and a carry, but and potentially a carry if we're creating SPVs. But if we can get paid for that upfront work, obviously that's also more power to us and better for our operations. Challenges heading into next year. some of the things we're seeing is that already kind of local investors, local angels in particular, are already kind of starting to tighten purse strings because of those kind of macro factors we've talked about. A big part of our diaspora is in the tech sector. They're very nervous about tech layoffs. The three sources of their wealth, their jobs, job security is now questionable. Their stocks, which are down, and their housing, which may have a crash. So obviously they're quite getting nervous as well. Maybe, $100,000 SPV that took me, a little more than a week to fill on Angel List. Maybe it's now $50,000 and it's taking me 2.5 to 3 weeks, right? It's still happening, but it's certainly, I see the slowdown. And also we've seen that in some of these deals that we're working on with international VCs, that they're taking a longer time to negotiate. They're asking for tougher terms, larger liquidation preferences. Their due diligence cycles are longer, and it just and they're also looking for the companies to show much stronger unit economics, gross profits, et cetera, which those things take time, right, for these companies to kind of augment themselves and recalibrate themselves. It doesn't happen overnight, and I see a lot of deals potentially and follow-on rounds, for example, getting potentially pushed back into next year. So certainly it's the things we are seeing, and then I think particularly Polly and I were talking about this. So one of the programs that we are running that is funded by USAID is called WeScale. So it is under a program funded by USAID called the South Asia Regional Digitization Initiative, which is in turn implemented by DAI, which is a major development contractor. It's where to build the capacity of women entrepreneurs in the region. And just to kind of show the gestation period, the original request for expressions, or interest, I guess, were issued in 2021. The concept note was given in 2020, early 2022. The full proposal was in 2020 Q2, and then to finalize terms was Q3, and then we finally launched this past month, like literally in November. So very long gestation period, but and it's an 8-month project. The intent is it's a digital accelerator led by Accelerating Asia, which is an accelerator and a VC fund based in Singapore, been very active in the region, including in Bangladesh as of late, supported by GBAN network partners. Like people actually I met through GBAN in many ways, or have worked through GBAN, like IAN, Lankan Angels, et cetera, although Indian Angels could not be with us in the final phase because of some challenges, I think, around their capacity and then things like that. But I think what we pitched to Sardi was, look, if you're trying to improve the capacity of women entrepreneurs, a big part is actually getting them funding. And we were one of the few, our consortia, there were like 8 or 9 total, including US-based consortia and others. Our consortia is the only one that is fully local. We're all in the region. Second, we actually have experience, right, supporting entrepreneurs, training entrepreneurs, but also getting them funding, right? I think if you add up all the capital that we've all facilitated over the last 4 or 5 years, it comes up to close to $200 million, including obviously a bulk of that is IAN. So that, I think that was very powerful to say, look, we actually know how to get these women entrepreneurs funded. Now what we want to do is we want to create a regional women angels network under this umbrella. But then over time, who knows, maybe if this program, even beyond this program, if we can show that it can succeed, we can continue this as our own kind of project between the partners beyond that. So I think they like that, and the intent is we're going to train 100 women-led companies put them through a 12-week digital accelerator, kind of combining all of our content and curricula that we've developed, and then of which 20 entrepreneurs will get in-depth support beyond that to actually raise their first funds. So it's very much an experiment, but we're excited about it. And we just closed applications, but this is the challenge, right? At least in Bangladesh, we've got a lot of interest, but I think in the other countries, just given the timelines, given the fact that it's end of the year, and it's not as easy to go out and find women-led companies, because then you have to see, is there gender washing? Is there what proportion is actually owned by women? There might be a woman applicant, but she may not be the founder, et cetera. So there's a lot of due diligence that goes in as well. So for many different reasons, we're not pushing back the start of the program to beginning of the next year. And then my kind of vision is, we'll take this money that we're being paid to be part of this WeScale consortia, to then reinvest that into our women's network called Bangladesh Women Investors Network. It's a separate team within BAN that we're carving out, almost like a separate pod, specifically focused on 2 things. One is to get more women funded as part of our overall portfolio, and second, to get more women investors involved in the ecosystem as part of our overall network. right now, which is around maybe 10 or 12%. We want to increase that, the uptick on that side as well. So I mean, that's the intent, is we'll use that money to kind of recycle that into this particular initiative of BAN. Yeah, and then Paulie and I discussed this quite a bit, but I think there's definitely a lot of opportunity for angel networks like us, and obviously part of GBAN to I think donors now more and more recognize the importance of angel networks and catalyzing ecosystems, right? Beyond just accelerators and incubators, but really like the actual job of getting that early stage capital is borne, and that burden sometimes is very much borne by angel investors and angel networks. And I think there's a lot that could be done around educating angel investors, maybe adding accelerator type components to angel networks, for example.
Did he freeze for anyone else?
Yes, he did for me as well.
Okay. We'll give him 1 second, but while we're waiting for him, does anyone have anything to chime in with? I got a few things, but I want to give the floor to y'all. Oh yeah, we lost him. Oh, there he is.
Yeah, sorry, I don't know what's going on, but yeah, I think that was kind of it in terms of the presentation. But I'm happy to answer any questions. My apologies, my network's not cooperating.
Oh no, totally happens. So yes, the floor is open, but I'll definitely lead with the fact that I still can't understand this whole venture of getting the first operational functional angel network active in a region, and how to like articulate the importance to these like international finance and development institutions in a way that's like, yes, spend the money on it, right? And I also can't figure out how to like make the argument about like how much should actually be spent by these organizations versus how much should be spent locally, because I can't figure out like what the most successful model is, right? Like I can't parse through the numbers the correct way. And this is a problem I've been having trying to justify the capacity building services that we want to offer at GBAN, because I just can't clearly delineate who the players are in the market and who should be the ones trying to get the early stage investment ecosystem engaged and functional, right? Like who should, because there's some clear research talking about how when government is involved, sometimes it actually ends up leading to lower outcomes. But when you have government and the private sector working together and both investing in companies and participating, then success is even higher than if it was just one or the other. So any thoughts on that?
Is that for me?
In general, I mean, that's a general thing. It's a general thing for sure.
Yeah. I think, for us specifically, I think we benefited quite a bit from the Dutch Global Good Fund and their support, at least in the early days. So, it wouldn't have happened really without them, in the sense that, they gave us a sort of a small grant to get started, right? So at least fund our operations for the first 3 years, right? And whatever loss making, like obviously we'd have to generate revenues, but whatever losses, it can be covered through that. So that was very helpful, and it was a grant. But then it came about only because of their relationship with Avishkar, right? This impact investor, because they were investing in the country. They were having this specific issue of they're trying to cut checks of $2 to $3 million out of their frontier fund, of which a lot of companies and entrepreneurs in Bangladesh would start asking for $100,000 or $200,000. So they felt that an angel network made sense. They had experience working with angel networks like Lankan Angels and to an extent, I think a few others in India as well. So they had some experience already. And so that was kind of a really good partnership. And then the third leg of this is we had some really great, initial board members who joined from the ecosystem. They were leaders in the ecosystem. They were leading some of the most prominent accelerators, incubators, even the CEO of this, Startup Bangladesh Government Fund. Back then, it wasn't a VC fund; it was more like a project within the ICT ministry. But nevertheless, all all these leaders came together. So I think that's where, the Dutch Global Good Fund saw that, okay, Avishkar is there, so they know what they're doing, at least from a technical standpoint. These other individuals are involved, so they know what they're doing from a local ecosystem standpoint. And so I think that makes sense as a combination to actually back as a project, right? So, and yeah, I mean, we're happy to say we're self-sustaining now. We're running on our own revenues through these different means: memberships, commissions, sponsorships, from local financial institutions, for example, for our events, and also from these grants and contracts as well with development partners, more like advisory work, et cetera. We're making it work. Let's see how that goes into next year. But I think that's where we really benefited from that support. But it was a very unique combination, right? Obviously, it doesn't happen every day. But who knows? Maybe there are opportunities, at least within the GBAN network, to say, look, GBAN knows how angel networks are run. And obviously, and obviously when combined with very active local angels who then maybe want to create platforms, maybe there's a combination there.
Agreed. And then the funding and the fellowship models and things like this too. Lorenzo?
Yes, I would like to learn a little bit more about Bangladesh in several respects. So I have two questions. One is about the relationship between the public sector and the private sector. I'm asking this question because in my country, it's a very difficult kind of relationship in the public sector and the private sector. The other question is about the startup investment culture amongst wealthy people, and how do you deal with that, and how is it within the country and outside, I mean, in terms of the diaspora. In Venezuela, we also have a large and growing diaspora. So we live this kind of dilemma. So what to do within the boundaries of the country, or what can we do outside with the support of the diaspora? So it's a question about the startup investment culture.
Yeah, I think on the first one, I think one of the things that for at least the government, the ICT sector is seen as a thrust sector. It's a means to diversify the economy away from textiles and manufacturing, which got us to where we are. But obviously, we have to move beyond that into more of a services and knowledge-based economy. Otherwise, all these young people that we have, will not be able to get jobs and get employment. So I think for them, they've been doing a few things, right? So one is actually, investing in the ecosystem and the infrastructure. I talked about the Startup Bangladesh Fund. There's also the Bangladesh High Tech Park Authority, which is investing in, for example, very data centers and technology parks throughout the country. Right, that's also something they're doing, and in relation to that, they're also funding programs to support entrepreneurs in these hubs. Right, they've also recently come up with what's called a startup sandbox in order to, for example, for companies that are loss making in their first few years, to be able to carry over those losses into subsequent years. I think being a little bit more flexible when it comes to kind of compliance and filings, at least in terms of timelines. Still have to do it, but compared to maybe other types of companies, at least if they're registered with the Software Association, for example, they've also been trying to, I think, look at ways in which they could help kind of provide the backing of the government to drum up interest abroad as well, supporting delegations, supporting roadshows, including to diaspora communities, right? So all of those things are good. I think, at least from the startup sector, we see the government as a supporter and a key enabler. And even for example, the Investment Promotion Authority, they helped inaugurate us at our event. They've always been kind of, checking in on us as well. Most recently, I think they're also looking at ways in which the loss-making companies, startups, can get listed onto the stock exchange. So there's a pilot program that's kind of underway as a partnership between the SEC, the Securities and Exchange Commission here, as well as with the ICT division, right? So there's a few elements like that. So I think those are all commendable. But we still have challenges that there's things that the government can only do because I think they have to change the philosophy around certain things, right? And that's still a challenge for companies in the startup sector. for example, one particular challenge is that it's very hard to repatriate capital out of Bangladesh because we have a fixed exchange rate to the dollar in order to support manufacturing and exporters. And so there's a very kind of tight regime around that. You can't just repatriate capital willy-nilly. You have to get government permission, which is almost impossible to get. But what that means then is, but the problem is most investors, foreign investors, will not invest directly into Bangladesh. They see that as still a developing country. They're not familiar with the legal system, et cetera. So they'd rather invest in a foreign holdco in the US or in Singapore, right? So then what ends up happening is companies will have kind of dual cap tables where local investors, including local companies and local individuals who cannot repatriate their capital abroad to invest even in a Bangladeshi company. So they will end up being on a local cap table, but then you have international investors who are on the foreign cap table. And it's still, to be honest, it's still a bit of a gray area. What rights do local investors have vis-a-vis the foreign investors? What rights do the foreign investors have vis-a-vis the local investors? For example, when there's an exit, there's not been a idea to IPO type exit in Bangladesh yet, right? So we haven't had that to face that issue yet, but that is a big gray area and a big kind of question mark that hangs over every company in the ecosystem, right? But that won't be solved by the ICT division. That's a conversation the government needs to have with itself to say, okay, how are we going to open up the investment flows into our economy? And they have to do that sooner or later, right? As they're growing, the IMF has been pushing that for a long time, for example. But that's one example of a challenge, right? That's and that can only be solved by one element of the government. It's a government-wide question and a problem, because it then goes into things like infrastructure investments, goes into private equity, right? Corporate investments, not just startup investments. I think with regards to getting individuals, right? I think in many ways, investing in startups is still. I think it's becoming more and more of sort of a mark of social status, right? To be able to say that, hey, I've invested in this company and now it's a household name. That's definitely there. Only a few people have really made money from angel investing, and there's only been a few examples where, and it's mostly when you invest in the company in the early stages and they end up getting money from the Sequoias and other VCs of the world, and you have kind of opportunities for secondary sales. But definitely, there's I think that's still the perception of Bangladesh internationally, but I think it's changing, because I hear that a lot from international investors is, look, there's a lot of capital in the country. You come into Dhaka, the certain streets, the certain buildings, certain coffee shops, and it's no different from, for example, being in Mumbai, right? Or these more developed kind of international cities in Southeast Asia and South Asia, right? And even parts of Africa, I'm sure, like, has that same kind of perception issue. But so there's a lot of capital in the country, and there's a lot of individuals with spare capital to put into novel opportunities, partly because they see it as a diversification play, partly because they see that as the next chapter, but also from the standpoint of, look, I want to help the next generation create, because we benefited quite a bit from what's happened in the country, and these ideas make sense in the long run. That's there, but to be honest, I think that the challenge is maybe the individual directors can cut a check of $50,000, $100,000. But when you talk to corporates in Bangladesh that are, sitting on balance sheets of $500 million, billions of dollars, they're still very skeptical about investing in startups. And then their CFOs and their financial people start asking, well, look, is this company actually going to, generate profits at some point, right? This makes no calculus against how we decide on investing in projects. Why are we giving the founder 80% of the shares? So, why don't we take 50%, 60%? Why don't they just come and work here, right? Like, so the discussion is very different when it comes to at the corporate level. At the individual level, I think it's more and more of a kind of an easier sell. Now, with regards to diaspora, I think it's a few things, right? So on one hand, we have a very young diaspora, right? Most of the migration from Bangladesh has only really started in the last 20 years. So you see people who are still 10 years into their professional careers, 5 years into their professional careers, 15 years into their professional careers. So, but that also means that they have some disposable income, and they're happy to cut a check of $10,000 or $20,000 into an angel list SPV, for example. That's becoming an easier conversation. And what I find with them is there's definitely a pull towards investing back in their motherland, right? There's very much a soft pull, but then you definitely have issues around, right? They talk about, okay, well, how do you deal with corruption? How do you deal with getting money out? I want to I have money in Bangladesh that I want to get out, not the other way around. I don't want to invest in Bangladesh. That's still there, but then I think platforms like AngelList, because they know it's an American platform, it's governed by U.S. laws and jurisdictions, and obviously when you have holdcos in places like U.S. or Singapore, they feel more comfortable putting money into those places rather than directly back into Bangladesh, if that makes sense. So oftentimes they end up becoming like those foreign investors who would rather put money into a holdco rather than a local co, if that makes sense.
It sounds that we have a lot of similarities. Kind of things that are happening within Venezuela and in our diaspora also. Thank you very much for your answer.
Yeah, thank you. Learned a lot from that. Sorry, I was on mute. There was another question in the chat. I think it was a little bit more general. Yeah, from Cheryl.
Yeah.
Which you were just kind of talking about this a bit, but I'll let you take that.
Yeah, I mean, for us, I think, what we did was we sort of created this funnel, right? And anybody who comes into the team kind of knows that, part of your value add is how you grow the network, i.e. how do you get more people to join? And the way we do that is we post a lot of content, right? We have a newsletter, we have a very active LinkedIn page. Those are our two most important channels. Facebook doesn't work as much, right? You don't get a lot of professionals. But then another part is, we just kind of actively reach out to people. But yes, so what we'll do is we'll post content, right? So anytime somebody new joins the network, we'll post it on LinkedIn. And then what we find is if they post it and we share it, then they'll get all their friends, right? So let's say you're a tech, somebody who, graduated from the top engineering institution in Bangladesh, immigrated to San Francisco, you're a software engineer now at Google, we post about you, you post on your LinkedIn, suddenly 100 of your friends like that post. And then what my team will do is we'll lurk and wait, and then we'll go through all your friends who like that post, and we'll message them, say, hey, your friend joined us. What about you? Right? How would you like to join us, et cetera? And then we'll have that conversation. We'll have like a 30-minute conversation. There's a very structured pitch, a script that we have about why you should invest back in Bangladesh if you're the diaspora, or if you should invest in startups, let's say if you're a local, answering any rebuttals, et cetera. And what we'll do is we'll invite you, right? So we'll invite you to our webinars. So we do webinars pretty much once a week on different topics, whether it's firesides with founders, whether it's founders pitching for funds, whether it's sitting down. I've actually done this with a few GBAN colleagues, is actually having firesides with international investors who invested in learning from their home market, for example. So those are some of the topics, or specific kind of content related, say, hey, how do you do a financial model for a startup, et cetera. And we'll invite you to join these sessions and kind of see the value of being part of the network, what you get to learn, et cetera, being in our email thread. And then we'll say, hey, would you like to join? Right? I think you've been joining our sessions. You've been, we know you're reading those decks. We know you're opening those emails. So you're clearly finding value in what you're doing. So would you like to join? How much we charge? We don't charge a lot. It's $500. Anybody sitting, in the US, for example, it's really not much in the context of things, especially if they see value in kind of being a part of this community, and also being a part of, getting access to this kind of deal flow, data, information, et cetera, that really adds to their own kind of, desire to kind of improve themselves professionally, right? And so I think that's helped a lot, right? And it's starting with just content development, pushing things out, tracking who's reading it, going after, we built a really great kind of sales engine, if that makes sense. And I think a lot of that really comes from once again, the diaspora, right? Those who are based abroad, who are Bangladeshi, where, chances are one of our team members have knocked you at some point. And then even if you say no at a particular time, we'll keep you on newsletter. You'll get the newsletter, like the public newsletter, once a week. And so we know you're still reading, and then we can re-engage you in 3 months, 6 months time. But we had to learn that from scratch. We had to learn how to be a sales organization as much as an investment organization. But that was a big part of how we grew. And obviously we benefited from having a very large diaspora base, right? I mean, we still only, there's, I think, if you take the top 5 universities from Bangladesh, and if you look at on LinkedIn, if you just do a quick cursory search of how many of their alumni are at the top technology companies, like the Mangs, right? Like the Metas, the Netflixes, the Googles, et cetera. There's, I think, at least 5,000. right? And we're only 400. And so we still only scratch the surface there. And then if you go beyond that, there's tens of thousands more. So we can go even farther, to be honest, if we had, a bigger team, for example. But so far, I think that's helped us in terms of really approaching this like sales. Hey, be part of this network. Here's what you're going to get out of it. If it makes sense for you, let's talk more. If it doesn't, no worries. Let's stay in touch.